When the market is a storm, your money needs a safe beach. What if I told you there are special kinds of investments that are like an umbrella in the rain or a bunker in a storm? When the market gets crazy and everything is falling, these investments are designed to hold their value or even go up. They're called safe havens, and every smart investor knows about them. Think of your investment portfolio like a football team. You have star strikers, your high-growth stocks, who score goals but can get injured. You also need a world-class goalkeeper, someone reliable who protects you when the other team attacks. Safe havens are your financial goalkeeper. Their main job is not to make you rich quickly, but to protect the wealth you already have during times of market volatility. That's just a fancy word for big ups and downs. Let's meet the goalkeepers. 1. Gold, the classic. It's a physical thing you can hold. People have trusted it for thousands of years because it can't be printed by governments. When people lose faith in money or economies, they often buy gold, which can drive its price up. 2. Treasury bills, T-bills. These are basically loans you give to a very strong government, like the US. They promise to pay you back with a little interest. They are considered ultra-safe because it's very unlikely a major government will default. 3. Defensive stocks. These are shares in boring but essential companies. Think utilities, electricity, water, healthcare, and consumer goods, toothpaste, food. No matter the economy, people still need light, medicine, and to brush their teeth. These stocks tend to be stable. 4. Safe haven. Currencies. Some countries are seen as incredibly stable, like Switzerland. Their currency, the Swiss franc, is like a fortress. In a global crisis, investors from all over the world rush to buy it, which can make its value rise. Here's what you must know. Nothing is 100% safe. Even safe havens can lose value. Their strength is relative, they often fall less than everything else. The inflation problem. The biggest enemy of safe havens, especially cash, is inflation. If your money is sitting in a safe place, earning 1%, but prices are rising 5%, you're still losing purchasing power. They're for defense. Don't expect huge gains from safe havens. Their value is in diversification, having a mix of risky attackers and safe defenders on your team. This is not financial advice. This is an educational breakdown of market mechanics to protect you. If the market crashed tomorrow, what would be your safe haven? Gold, cash in a strong currency, government bonds, or something else? Comment below so others can learn from you. Do me a favor, like, share, and subscribe for more investment tips from the nerds.